What's up, traders? Today is Thursday, February 29th, and we'll be doing analysis for a trade we took on Tuesday, February 27th. So as you can see, that trade ended up in a loss for minus 0.75%. And that was a gold trade. So looking over the daily bias, you can see daily bias for gold was bullish. Daily bias for gold has been bullish for about 5 or so days now. And US 30 bullish as well. EU bullish, the US dollar bearish. Now this trade was based off, and you can see how gold is spiking up right now. So this trade was based off of a 30 minute entry. So I'll just apply the bar replay tool here and just go over this. So here on the 30-minute time frame, we had this test and rejection of a double SAR zone. Now we also had this 15-minute trade on the 15-minute time frame. Now the initial 15-minute trade that we missed, I think I was doing analysis on the 30 minutes, so the 15-minute one was a much quicker one and better one, especially because we had demand sitting here on the 15-minute, but we missed that trade when because it ideally tapped, if you can see here on the 15-minute candle. And let me just exit this. If we go to the 15-minute time frame, this was the trade setup. That's what we were looking for, a test and rejection entry. And you can see if we play the candle, it tapped the entry exactly and then spiked again all the way up. And this trade would have given like a 1:1 risk to reward, meaning we would have set break even for this trade, and eventually the trade would have gotten taken out at break even. But anyway, so since we missed the 15-minute trade, I was looking to take the 30-minute trade setup when it did line up. So we got confirmation for the 30-minute trade setup, but you can see, unfortunately, when we entered the trade, started off in a bit of drawdown, but price started rejecting back up to the upside. But it did give us like an enough push to give us that 1:1 risk to reward so that we can set break even. So looking back here, also looking at the 30-minute time frame, so remember, even in my previous analysis, we talked about if we are buying, when we turn on the zones indicator, we want to see buyers sitting in and around where we want to buy. If we're selling, we want to see sellers sitting in and around those SAR zones. So here, if we turn on the zones indicator, you can see, yes, we did have buyers where we were sitting or where we were buying at. But if you guys remember, we talked about we want to buy in like a demand zone within a demand zone. So it means overlapping demand zones. If we're selling, we want to sell in supply zones within supply zones, meaning overlapping supply zones. So here, this demand zone was only based off of one candle. So we really don't want to be making trades in zones that are based off of one candle, because as you'll see here, as we keep replaying, you'll see eventually once price becomes bearish enough, you get that candle or that demand zone being taken out so fast. So here, if we keep playing this candles, so you'll see eventually at some point, there you go. So that demand has been taken out, comes back in, and then once this candle closes, keeps going, and there you go. Eventually that demand gets taken out. So it's easier to take out demands that are based off of, or supply or demand zones that are based off of one candle. But if supply and demand zones are based off of multiple candles, so for example, we can see where price was coming from right here, this zone that's right here, you can see this is a strong selling zone, right? Because within all these red zones, we have zones in there that have more red in them. So that just means in there, that's where the sellers are concentrated. So those are the kind of zones we want to be trading going forward. So for this particular one, trade got stopped out at stop loss. So I'd told folks to get into the trade with 0.75% risk. Personally, I'm still doing 1% risk for the trade, but for the official trade, 0.75. So as soon as we hit that loss, you'll see that we updated the spreadsheet on Tuesday with 0.75%. And also for me personally, you can see I posted that loss on February 27th. I was down 2K, and that's on a 200K account. Now if we keep going and see where gold will rebut from, so we can see here where's the next demand zone. So we have this demand zone in here, and this demand zone is based off of, let's see, it's based off of one candle. So let's see how or what price does when it gets to those zones. Give me 1 second. Let's see where gold goes ahead and does any sort of reversal. So taps into, comes down, creates more demand zones. Let me just play this, and then what I'll do, I'll exit this and apply the zones indicator. And let's go back, do replay to this area where it reversed from, and see what zone was in there. So sometimes, so it doesn't mean that all reversals will take place in those concentrated or overlapping supply or demand zones, but you have, it's a game of probabilities, right? So you have more probabilities that price may rebut from or reject from those zones as opposed to zones that are based off of one candle. So in here, let's look at, so even where gold rejected from at that point, they really didn't tap into any demand zones per se from this low right here. But right now you can see gold is spiking to the upside. We had news this morning, unemployment claims, and pretty much all instruments, gold, US30, have been spiking to the upside. Now yesterday, which was February 28th, I'm sorry, we didn't have a live session. However, this is a bonus. We had, or I had sent up this markup for US30 previously in the group, and I think I sent this out on Tuesday I'd sent it out. So if we go to the Discord, let's see what we'd sent out in the Discord. Well, actually, since I sent it in the indices chat, look at this. So this was Tuesday 27th, the same day we took that US30 loss. If you look at this, I sent this US30 markup. It was also based off of that supply and demand level, because here we had a strong demand zone. And look at the outcome for US30. And yesterday, as much as we didn't have a live session, I took a trade for US30 that's right here, and it went straight into profit. So this is what I mean about learning these strategies and learning to apply them by yourselves, because you can see, as much as we didn't have an official trade yesterday, and my goal here is not to show that, oh, we're always winning, or we are winning a lot. Keep in mind, you can come to the live session with me and take a loss, and then maybe the next day or even later on that day I take a trade that's not an official trade, and I end up being in profit. And then for you, the next time you're still in the hole, but for me, right, I already made up the loss. So you can see, like yesterday, as much as I've had some losing streaks, I think the previous 2 trades or whatnot, this was February 23rd loss, February 27th a loss. But yesterday I took that US30 trade, was up 4k on one account and 4k on the other account, so that's 8k on 2 accounts in one day. So you can see, because I'd already understood why I was drawing this, and I sent it out to the group, and I actually went over this, I believe, in the live session as well for Tuesday, February 27th. So if price gets to where you're anticipating a reaction from, if price gets there and everything aligns, you just go ahead and take the trade. It's as simple as that. I'm not sure how I can emphasize that a lot, because you should get to a point as a trader where you're waiting for price to come to you. So for example, like this particular trade, I waited for about a whole day for price to get here, because we marked this up on Tuesday, and I got this trade yesterday, like ideally 24 hours later. So it was just a patience game. So I just wanted to see this pattern play out. I really wasn't looking to take entries here, as much as I knew there was going to be some sort of price reaction in this zone. I wasn't interested in taking the plays out there, because I knew, or I did not anticipate them to go straight to my TP. But I did know that if price had gotten to this zone right here, and we got some nice rejection, that would go straight to my take profit, and you can see the outcome of that trade. But anyway, that's just a bonus. So we'll see what other trades. Today is the last day of the month, and last day, actually, yeah, just last day of the month. So we'll see whether we'll end. So currently on the official trades, we are break even for the month, which is good. February has been a tricky month, even across the industry, even across checking out or listening or hearing from other traders. February has been a tricky month to trade. We've had a lot of consolidation, a lot of fake outs. So at the end of the day, being at break even for the day or for the month, that's a plus for a tricky month. Worst case here, since we are risking 0.75% per trade, if we do take a trade today and it ends up in a loss, it would be like minus 0.75. If we do take a trade and it ends up in a win, it would be a 1.5% gain for the whole month as well. So we'll see what today brings, if we get any trade setups or if not. But anyway, I will catch you guys on the next trade recap. Peace.